Now let's talk about the order process. This all assumes that you have an account with TD Ameritrade that allows you to trade options and that you've installed the desktop trading application called thinkorswim. I'll demonstrate using one of my paper accounts with thinkorswim. First place we start is here with our own investment recommendations spreadsheet. And for today, we've configured it for an expiration date of 4/21. It looks like the put vertical spreads need to be below 255, and the call vertical spreads, the short leg needs to be above 349. So let's go look. Bearing in mind that distance is our friend. We'll go over here to look. We'll go to the trade tab in thinkorswim. We'll put in OIH, and we'll select the April 21st options chain. We'll scroll down here to 255. There's 255. We have 82 open interest. The delta's a little high, but it's probably okay. The difference between the mark for 255 and 250 is a little strong. It's 55 cents, which would put $55 in our account, but we like things below 50 and in closer to the 30-cent range. So if we look at 245 and 240, we'll look at that one. Again, see, we've moved away from the price of the ETF. So distance is our friend, so the farther away we can get, the better off we are. We'll right click on this, we'll sell custom, and we'll sell using this template that's we've defined. It's profit capture, stop limit, and in the money protection. In this case, we've got 245, 240. I usually drop this down a penny or two to facilitate getting filled. All of these are right. This is your profit capture. This is your stop limit. And this one down here is your in the money protection. More on that another time. These two, this one needs to be configured so that it becomes active in the system tomorrow. So we're thinking that the sale is going to happen today, and tomorrow we put in the capture profit and the stop limit orders. Put those in tomorrow to avoid being labeled as day traders. And finally, the last thing we need to do here is we need to go into this one, and we need to tell it that this is set up for OIH. All the information you need for this is down here below. And so this is set up on a mark. The trigger is less than or equal to for puts. It is greater than or equal to for calls. So in this case, it's set correctly, and the amount is going to be the 245. So we'll go to 245 on this one, and that's the amount for the in the money protection order. It's all set to go. We hit confirm and send. So that goes off into the netherworld. And then we want to always try to put an iron condor in place. And so the other side of this is OIH. Got to be calls greater than 349. So we'll go back over here, look at the call side. And there's 350. Plenty of open interest, but it's a little strong on the premium side. It's 5 1/4. So we'll take advantage of that and pick a vertical spread that's farther away. This is still going to give us 445. That's too much. So let's go to 360. Yeah, we'll go to 360, 365. What we do is we right click, we sell custom, we pick the template, 360, 365, all of that's correct. It's going to bring in 35 bucks. We drop that a couple of them to get it to execute. And once again, the only thing we have to change at this point, because both of these orders are already set up to go in tomorrow. So the only thing we have to change here is this order. And it is OIH based on the mark, but it's a call. So we're going to have to go to greater than or equal to, and greater than or equal to 360. We'll save that out and confirm and send. Now we've put out orders, 2 orders, one for puts, one for calls, for the market to fill, and that will complete our iron condor. That's how easy it is. Thanks for watching.